reporting. We've only had a handful of actual results so far, as well as the exit poll, of course, but already there have been sharp movements on the global currency markets. Our business reporter Alex Ritson is on the trading floor at CMC Markets in London's financial district, the City. So, Alex, tell us what's been happening.
Hello, Robin. Yes, in the middle of the night, as it is here in London, this would normally be a very quiet place. I think there are normally two people working on the night shift, surrounded by a load of screens and clocks for every country in the world, pretty much. Tonight there are 14 people here. It has to be said that half of them actually are journalists like myself, but they have brought in a lot of other people to cover this. And looking at the screens, I think the big story of the night so far, because we're in that quiet period between where America closes and Asia wakes up, the big story so far are the currency markets. As those initial reports of a hung parliament from the exit polls came in, the pound against the dollar dived 1.5 US cents. Now with me is Michael Hewson, who's a market analyst at CMC. Michael, you've got those charts in your hand. They are quite extraordinary, aren't they?
They are. I mean, basically what happened was about 10 o'clock, the first exit poll came out. The pound initially spiked up 20 or 30 points because the Conservatives came out as the majority.
That's a third of 1% to the non-financially aware.
Popped up with a third of 1%. And then the market sort of realised that, well, actually, 305 seats is not enough. It's hung parliament territory. Sold it all the way back down to 147.20, that's 150 points. And then the results came in from Sunderland, which showed a swing back towards the Conservatives. The pound then turned tail and marched all the way back up to where it's currently trading, around 149.
Because the thing is, a lot of people had thought that the idea of a hung parliament had been priced in by the financial markets. It seems that actually they weren't so certain of it. They were still hoping for a Conservative win.
There is still, it depends who you talk to in the City. I'm one of the sceptics who think that it hasn't been priced in because of the horse trading that would have to go on between the Conservatives and Labour and Lib Dems, whoever holds the balance of power. Essentially, there's clear blue water between the Conservatives and Labour and Lib Dems. Conservatives want to cut now, albeit to the tune of £6 billion. Labour and Lib Dems don't. So how do you marry up those two polar opposites?
And another reason for all the extra people here tonight, the bond markets are going to be opening in, well, it's going to be just over an hour from now.
No, it's 7 minutes from now.
7 minutes from now, right.
1 o'clock.
And what are we expecting to see there?
Well, we're going to look at the 10-year gilt future contract. And if the market is concerned about a hung parliament, we'll see the gilts sell off.
This is selling off the UK government debt. This is basically what world markets think of the results of the British election.
And drive gilt yields higher, which is essentially what we've been seeing in Greece, Portugal and Spain. Gilt yields have been going through the roof. Investors have been dumping government debt because they don't have any confidence that the government will be able to repay it. Now, obviously, we're not there with respect to UK gilts, but it's the perception that a hung parliament will bring about a certain amount of paralysis within the market.
Michael, just one more question I must ask you, because everyone was expecting the UK election was going to be the big story on financial markets, but of course it wasn't. It was this 1,000-point fall in the Dow Jones Index, 9%.
9% in 10 minutes.
Fat finger trouble, it seems to be being blamed. Allegedly, yes. That some trader somewhere in the world accidentally sold billions of dollars worth of shares rather than millions. Just put a B in instead of an M.
That's right. It doesn't bear out believing.
Can that be true? It's a mistake of monumental proportions.
I would be very surprised that there are not safeguards, because this has happened before. This happened in Japan a few years ago, where someone put in a massive buy order instead of a sell order, and these safeguards are supposed to have been built in. So it doesn't ring true to me, and apparently it was to do with Procter & Gamble.
Okay,
shares.
Michael, we'll stay in touch with you. Thank you. Okay. Robin, that's the latest from the City.
Thank you for that, Alex Ritson there, down on the trading floor in the City.